We're answering your questions now. That's what we want to do. First one is for Jim Lebenthal. Kurt in Missouri. The question is, are you still bullish Cleveland Cliffs?
Yes, I am. It's one of my favorite stocks. It's not just the turnaround, and it's not just this dynamic CEO, Lorenzo Goncalves, but it's what the company is doing for the American steel industry. I don't have time to do it now. Look up hot briquetted iron, but they're making the American steel industry more competitive globally without tariffs. It's a fantastic story. Good for the globe on a pollution level, too, because the American industry is much better at controlling pollution.
Okay, good stuff. We had a question earlier in the week for Joe Terranova. We just didn't feel like we got the answer, so we wanted to revisit it today.
We'll do this again?
Okay, we're going to do it again.
Okay.
The original one, there it is, from Scott in Inglewood Cliffs, New Jersey. Are we in a bull or a bear market? This was on the heels of the Gundlach interview earlier in the week, who said we're still in a bear market.
Well, Scott.
Now, are we in a bull or a bear market, Joe?
Thank you, Scott.
I want the answer.
So,
right?
We are in a bull market in terms of price because 13% of the S&P is the big four companies. We are in a bear market if you look at the 10 major sectors and realize that 5 of them topped out in January of 2018. In the last 60 days, only 4 of the sectors, REITs, utilities, consumer discretionary, and technology, have made new highs. November of 18, healthcare did. You could also make the argument with Jeffrey's right that investor confidence and synchronized global growth are both in a bear market. So I cannot tell you definitively bull or bear because there's the predominance of price that's impacting the answer.
So he focused on the New York Stock Exchange composite to make the case that we're still in a bear market,
And
to which Josh said earlier in the week that he disagreed with the thesis by using that particular index.
Well, you won't find it. You won't find
Closed-end funds.
You won't find a chartered market technician on Earth that would look at just the New York Stock Exchange composite and draw a conclusion about anything. So Jeff makes a good point that most stocks are not within 4% of their highs, even though the S&P is, and he's right about that. But the New York Stock Exchange composite has ADRs. It has closed-end bond funds. What are we talking about? The S&P 500 made a new high. De facto, we are out of a bear market in all senses. But we're not in a roaring bull, and Jeff's right. There has not been material progress for most of the stock market since February of 2018. That has not yet changed. So I think there's room for us just to say one of us is feeling the elephant's tail, the other one has the ear. We're not all agreeing on the big picture, but we all have some sense of maybe it's an elephant.
Okay, good stuff. Thank you for answering the question.
Thank you,
All right?
Scott,
You want to have to come back 3 times. We're going to have to play the McEnroe clip. The question. Answer the question.
And I will. I'll always answer Scott's
All right,
questions.
I appreciate that.